Good afternoon, George Cavaligos, HFT Bonds Notes. I know, Kevin. I'm tired too, my man. And I'm not waiting for Friday either. All right, what's the lesson today? Listen to yourself, you knucklehead. Remember what I said last night? You want to buy that dip back down towards 147.15 and 132.27? I think when I woke up this morning, we're trading 147.20 and I think 132.29. Risk 2 ticks on the 10-year long or risk 5 ticks on the bond long? Probably the trade to do, right? No, I didn't do it. I actually came in and sold the first bounce. Ended up making a donation to the market of a tick and a half, I think. And screwed around a little bit in the afternoon, back and forth, up 2, down 2, up 2, down 2, and I think I ended up down a tick and a half on the day. That was a waste of a day because I didn't listen to what I said was the plan yesterday in the video and in the chat room and everywhere, in the video, in the chat room and in the email. I don't know why. I'm tired. I wasn't focused. I forgot my plan. The old be prepared, the old Boy Scout motto, right? Well, not only do you have to be prepared, but you have to execute the plan. Prior preparation prevents poor performance, but you have to execute the plan as stated, and I didn't do that. So I learned a lesson. All right, look forward now. What's the next plan? Kind of a quiet range day, pretty low volume. No new ground was made anywhere in the treasuries today. You know, equities were up and stocks usually go up and the bonds go down. They didn't today. And they might be getting into the month-end extension trade mode here. We've got one more auction tomorrow. We have a 7-year auction tomorrow. We also do not have a buyback from the Fed tomorrow. You know, they're on that 4-day work week, that floating holiday or whatever they got going on now. Not sure why they're doing that, but they are. So tomorrow's no buyback. Tomorrow's the 7-year auction. That 7-year area of the curve has been heavily bought by the Fed, so I'm assuming the auction will go okay. Today's 5-year went okay. The Fed's sucking up so much supply that people are trying to buy whatever they can, especially if it's short-dated paper, to fill collateral needs, to park your money, to run and hide from the perceived equity crash that isn't coming, but everybody fears. You know, we've done pretty well, you know, considering all the terrorism stuff that's going on and everything. Equities are still at their highs. Bonds are still at their highs too, though. So we can't get too negative on bonds. Tonight's trade, I think if we do get any kind of a dip back down towards 132.29, 30 area on the 10-year, and probably 147.20, 147.22 in the bonds. Try to buy a little bit there and look to sell them out. You know, 133.08, 09 has been heavily traded on these spike moves up and down over the last couple days, so it's going to be tough to get through that area there. And kind of a similar area in the bonds around 148.20. It's going to be tough to get through there. We might not even get there. You know, these ranges are compacting here. I could see you know, 147.15 to 148.20 range through the week now, the next 2 days. Next week, no supply. Month end, both argue for higher prices. So give the lean, continue to buy dips in treasuries until something changes. You know, I had a conversation with somebody in the Hamzy Analytics options chat room today. Those guys are on fire, by the way. During these earnings seasons, you guys get probably 4 or 5 trades a day, and they're hitting the ball out of the park over there. I mean, if you guys want to trade equity options, you've got to be in the Hamzy Analytics HFT options chat room. Those guys are just on fire. All right. I lost my train of thought. Oh well. Have a great night. I'll see you tomorrow.